Hello, everybody, and welcome. This is a clarifying assets and expenses. If I'm crediting or if I'm using cash, when do I debit an asset or an expense? So my disclaimer and copyright notice, the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley and the South Orange County Community College District. Or California State University of Fullerton. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2022 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So, got a great question from a student this morning, which is actually inspiring to make this video, is they need assistance on clarifying assets and expenses. Why is prepaid insurance an asset instead of an expense? If prepaid insurance is an asset, shouldn't rent and off supplies be assets too, but instead they are expenses? Well, let's kind of go through and kind of remind ourselves in terms of what the way we want to learn about how do we record transactions. So when I record transactions, this is my balance sheet, right? I put a big T account here, assets equals liabilities plus owner's equity, expenses, revenues, debit, credit. What does this mean? Well, for our purposes today, right over here, an asset is going to be increased. It has a debit balance typically. It's going to be increased with a debit. It is going to be decreased with a credit. So again, I'm debiting the asset. That's how I'm increasing the asset. I'm crediting it over here to make it asset decrease. Over here, when it comes to expenses, I generally record an expense with a debit, right? I'm going to debit expense, and kind of conversely over here, when I come up and over here with revenues, I generally record them with credits. Liabilities and owner's equity, they will typically have a credit balance, right? They increase with credits, decrease with debits. I have my little songs like A, E, L, O, E, A, E, right? So that means, and of course, I just totally junked that up, but let's go ahead and come over here. And so when we're going through and recording, this is kind of going now to the question. So we now know how to record them, but when we actually choose either an asset or an expense, depends on whether or not we've received the benefit, or if we've used the item, which is going to be an expense, or if we will be receiving the benefit in the future. So to make this a little bit of a better visualization, we've got her DEP. Maybe I spelled the name correct. I don't know. Purchases insurance on December 31st, 2023 for $36,000 cash, right? So we know here that for her DEP, that in this case, right over here, we know that our cash is going to be going down. We know that our cash is decreasing by 36,000. Cash is an asset, right? So it's decreasing. We decrease it with a debit. We decrease our cash or asset with a credit. So we're crediting cash. Now, the question becomes, what do we debit, right? So because when we're making this purchase, we're doing this purchase on December 23rd. Now, if this helps you, this might be the better way to look at it. I want to draw a little timeline. And if I look at this here, well, when am I going to be getting the benefit? Well, it's giving me benefit in the future, right? If this might be, depending on when you're watching this video, this may be in the past, who knows? But in this problem right here, it's on December 31st, 2023. It's giving us future insurance coverage because it's in the future, right? What this is giving me future economic benefit. Because it's giving me future economic benefit, it is going to be an asset. So what we're going to do over here is we're going to debit prepaid insurance. And in terms of the account, we're going to go ahead and debit this for $36,000. So again, when we're going through and looking at these questions, so I purchased insurance on December 23rd for $36,000 cash. I know immediately for HDI, my cash is going down. So I'm going to have to show that cash with a credit, right? At the same time, what do I debit? Do I debit an expense or do I debit a prepaid? Well, it depends on when I'm receiving the benefit. In this case here, I'm going to be receiving the benefit in the future. It's future insurance coverage. Do we need insurance? Yes, we do. Maybe not in Las Vegas when we're playing blackjack, but we do need it for our business. So right over here, 1/1/24 to 12/31/24. So we're going to record the transaction as an asset. We're going to go ahead and debit prepaid insurance. This is going to be an asset. Again, the key thing with the asset is future economic benefit. We haven't used it yet. As of December 31st, 2023, we have not yet used that item. Now, when it comes in terms of going through and preparing it as a journal entry, whoa. I'm going to debit prepaid insurance. I'm going to be crediting cash. So this is going to be for 36,000, and then this is also going to be for 36,000. When it comes to actually recording this as a journal entry, and again, this is just for review. Once I do it in T accounts, it's really easy to kind of come over here and do it as a journal entry, right? So that happened on December 31st, 2023. I'm going to go ahead and record prepaid insurance. And over here, I'm going to go ahead and debit this for 36,000. For every debit, I need a credit. Over here, I'm crediting cash, and I want to make sure that I do indent cash. This is for my class. Your instructor might do something else. And this is why McGraw-Hill and a lot of these other publishers, I'm not just bashing on McGraw-Hill, but one of the things I do not like about these online homework platforms is there is no place to put a journal entry. Right. And they can't do it because they don't have like the algorithm or whatever else it is. So what we're going to do here is we're going to say, well, what did we do? Well, we purchased an insurance policy that will give us coverage from 1/1/24 to 12/31/24. Now, if you're taking my class, you just say we purchased an insurance policy that will give us future benefit or something like that. That's fine. You want to have a notation though, because remember, as accountants, as we go through and do our work, we're going through and recording the initial transaction. Well, guess what? The controller is going to look at it. The CFO may look at it. The auditors, right? Our financial statement auditors may look at it. The state auditors may look at it. The federal auditors may look at it. The IRS may look at it. Hopefully they won't bring in their guns, but the IRS may also be looking at it too. I'm just kind of kidding around. I know one of my former students worked for the IRS. Awesome. She's amazing. So as you're looking at this over here though, right, we want to make sure we include this memorandum. And it's just because if someone goes back and looks at our work, that's what we want to make sure we go through and do. But again, why is this prepaid? It's because we're getting the benefit in the future, right? That's the most important part of this. It's in the future. We're paying for it now, but we're going to get the benefit later on. Therefore, right now it's prepaid. Now you might say, well, Bennett, is it eventually going to be insurance expense? Sure, but that's not the problem right now. We're right here, December 31st, 2023. That's going to be when we get to the adjusting entries chapter. So let's take a look at another example. So right over here, we got her DEP pays $9,000 for rent for office space for the month of December 2020. Whoa, this is really old. December 2023 on 12/31/23. So over here, if I used office space, so I'm doing my journal entry as of this date, right? So 12/31/23, I pay $9,000 cash for rent for the month of December on this part right over here. Now, the key thing is on December 31st, 2023, I've already received the benefit of the office space, right? I went in there, held a little electric daisy carnival or, did whatever else I was going to do in there. So for this particular question, right, I've already used it. So let's do what we know first. We know that we're going to be crediting cash, right? No matter what, we're going to be crediting cash for $9,000. But in this case over here, because we've used it, we're not going to record prepaid rent. We're going to record rent expense because we've used the item, right? We've used this already. Because we've used it, we're going to record the expense. So how do I record an expense? I record an expense with a debit. Remember, it all has to make sense here. I record an expense with a debit. My cash is going down. How do I show a decrease to cash? I show that decrease to cash with a credit. All right. So let's come back over here and take a look at this one. So debit rent expense, credit cash. Again, because I've used it when I'm making the journal entry on that date, I have already used it. Therefore, it's going to be an expense. So coming over here, I'm going to have rent expense. and I'm going to be crediting cash. This is for 9,000. 9,000. Over here, when I do my journal entry, it's date 12/21/23. I'm debiting rent expense for 9,000, right? This journal entry is a direct translation of what we just did in the T accounts. I'm crediting cash. When I credit cash, I have to make sure that I am going through and indenting, right? So this is over here. This is basically going to be to record rent expense for the month of December 2023. Now, you might also be saying too, hey, Bennett, no landlord's going to let you live in a place and let you pay rent at the end of the month. But this is we're in fantasy land right now. We're right now going through. I just want you to learn how to do. We're recording expenses, revenues, assets, liabilities, and equity. We're learning, right? So as we get more further into it, we'll get into more of the intricacies. That's for intermediate accounting, but not for this class. Okay. So right over here, let's take a look at another example. So her DEP, hey, they're getting back together. It's going to be exciting. We're going to get a whole new trial, and my law school is going to get their reputation even raised again. Thank you, Camille Vasquez. So her debt pays $81,000 for rent for an office space on 12/31/23, and the rental payment will cover me from 1/1/24 through 9/30/24. Okay, so in this case here, I'm making the payment, right? So I know on 12/31/23, I know I'm going to be paying cash, right? My cash is going down for $81,000. Now, for every credit, I need a debit, right? What account do I want to be going through and debiting? Well, right over here, I know that. Basically, have I used it yet? And the answer is no. I haven't used it yet. On 12/31/23, when I'm making the payment, I'm going to be using this in the future. So over here, this is going to be prepaid rent, right? So that's really the difference between rent expense and prepaid rent. Insurance expense, prepaid insurance is, have I used it yet? In this case over here, I have not yet used it. And so this is how I'm going to go through and classify it. Let's go ahead and do the journal entry. So I'm going to have prepaid rent and cash. My journal entry, right, again, basically it's prepaid. Prepaid rent is an asset. I show that increase with a debit. Over here, I've got cash. I'm going to show the decrease with a credit. So this is going to be 12/31/23. I'm going to debit prepaid rent for 81,000. And over here, I'm going to be going ahead and crediting cash for 81,000. Note over here, I am indenting the credit description. Okay, that's what I do for my classes. Wherever you are, they may be doing it a little bit differently. Over here, we're going to go ahead and do our description. So to record prepaid rent from 1/1/24 to 9/30/24. By the way, too, there are a million ways to die in the West. Great movie. But there also, as well as, there are a million different ways to write journal entries. When you're going through and doing it, you'll talk to your manager or your supervisor and say, hey, which way do you want me to do it? We just don't want to say things like, Tom Brady likes his balls a little bit deflated. Well, he might say that, and he might like his balls to be a little bit deflated, his footballs. But over here, when we're going through and looking at this is something for us where it's like, okay, it's, it is what it is, right? We're just going through and we were recording that particular transaction. So that's it for today. I want to thank you very much for being here. No accountants were harmed in the making of this video, which is always good. Please do not forget to like and subscribe to the channel. If you have questions like this one from my amazing student, and it's a great question, please feel free to email me at 1812cpa@gmail.com. And I look forward to seeing you on future videos. Have a great rest of your day.